is Griffin.
My tummy hurts.
Green good, red bad. Hey, what's going on, guys? Nick with Off the Chart Trading. I'll be doing tonight's video that applies for Tuesday, the 15th of February. Hopefully you guys had a good day. Honestly, I didn't really do much today. Overall, account did fairly well. That's kind of why I started with the Russell, is because for those that have been consistently watching or that are members to the site or the Facebook group know that I'm big into growth stocks, specifically small to mid cap names. And although, funny enough, a lot of them might not be in the Russell, since they are small caps, I typically follow the Russell more than anything, mainly because of that reason that, obviously if small caps are performing well, then even if some of them are that I'm in or in the NASDAQ, since they are, some of them market cap are under $1 billion or around $1 billion or up to maybe 5 or 10 billion, they are smaller. They definitely do mirror the overall Russell, and I view the Russell as risk on trading. It was the first to get hit, and it's kind of the first to start slowly leading us back up. So I figure we jump in and take a look at mainly the daily chart and then cross-reference with the weekly chart, because we have talked about that high compression squeeze that the Russell was in on the weekly. Ultimately did fire long. We only got about 2 or 3 candles higher, and then obviously we saw some selling after that. And ultimately, the regular squeeze did end up firing short. And then here we are technically about 5 weeks into that. But we are seeing a decent reversal. The daily looks a lot cleaner. We do have that squeeze setting up. Momentum is shifting higher. So just definitely something to keep an eye on. Overall, like I said, a solid day in the small caps. I think it was up over 2.5%, give or take. Maybe closer to 3% at the end of the day. So definitely a solid move. And if that squeeze and the momentum keeps shifting higher, probably break above all these EMAs and potentially see the 50 get tested. We'll have to see. I mean, there's still a lot of FUD going on. For those that don't know what FUD stands for, it's fear, uncertainty, and doubt in this market. 1 minute it's, I was joking in the room today. It's like, because they talked about, potential troops leaving the border. I'm like, breaking news to 2 troops had to use the bathroom, so they walked away from the border, and that was good enough to send out news saying that they had troops leaving the border. And sure enough, I wake up and the ES is up, I think, 50, 60 points in the morning. So, and then Biden spoke, I think, towards the end of the day, and we dropped a bit. Then after he was done speaking, we rallied. So this is one that, and I can't stress it enough. You're either scalping, day trading, in and out. You take a trade, you're up 20, 30, 40% relatively quick. You take the money and you run. Or you're looking for names that you think will be big over the next few years and trying to get a discount, because a lot of those names have been punished. I mean, we're talking some stocks down 70, 80, 90%. And if you believe in the technology or the company or the management or whatever, I think it's better to risk X amount per trade, obviously position size, and know your risk management, and deploy capital that way and just wait it out, because, some of this has just been absolutely crazy. One thing I noticed before I started, because I was just looking at this stuff real quick before I hit play, is we have a similar pattern with the ES with that daily squeeze. So we're kind of, the 200's right there, that gold line. We have the 100 and the 50 at the upper range. So it's tricky because, could we go higher? Could we go back up all the way up to almost 4,600 here and then fail again? Absolutely. We have that emergency meeting tomorrow with the Fed. I don't think they speak. I don't really think they're going. I think it's a closed door meeting, so I don't think we're going to hear or know anything. I could be wrong, but I'm pretty sure no one speaks, and nothing as far as to the public. I don't think it's anything. I think the meeting will ultimately be about if they're going to raise to 0.5 or 0.25. With the CPI data and PPI, all this stuff coming out, I think it's leaning towards 0.5. I think that's what they're going to go with. I think they'll get one more report before March, and I think they'll make the final decision based off of what I guess technically February's numbers would be. So fingers crossed it's in line or lower, because then maybe that will switch it to a 0.25 rather than a 0.5. But I don't know. The market, I think, might be already factoring in having a higher rate increase to 0.5. So we'll just have to see. Maybe it's one of those rip the Band-Aid off and let's fast forward to March or even April, if it's as late as April that they, whenever they officially start. Because I think they'll mentioned the end of tapering at that meeting in March. I think it's March 16th or 15th. And then I don't know if they set the same date that it happens or it takes effect in April, but we'll just say the middle of March or beginning of April that we'll end up seeing some of that. And I think once that Band-Aid's ripped off, even though it's a known event, I think we'll get a clearer direction with the market. But until that, we still have geopolitical issues, which I don't personally think anything crazy will happen from any of that. And then obviously, as I've been saying since before we even started these videos, is, you know, the Fed, I think, is the main point of reference that everybody should focus on. I haven't heard anything about COVID lately. I'm not saying it doesn't exist anymore, but as far as being a data point that's, you know, we have 20,000 more cases, and then, you know, S&P drops 20 points or something. I don't think, I don't know. I think it's shrugging off anything COVID related, and I think that will be the theme going for the rest of this year. I think the only thing that will potentially offset that is if there is a new variant come, you know, fall and winter time, maybe Q3 or Q4 this year. If there's something maybe a little more deadly, then obviously we could see a resurgence of that, and that could obviously put pressure on the overall markets. But I think the word COVID and just overall, you know, market sentiment, I don't think they'll you know, be hand in hand going much further. I think it's going to be back to the Fed being top priority, and then obviously what these companies are, what they're saying as far as their guidance for the rest of this year, and then ultimately their overall earnings. I think obviously that's kind of how the market should work. You know, you invest in the company, you want to see it growing. If it's not growing, then obviously there's a problem, and then you know, reevaluate from there. But anyway, ES looks pretty solid. Like I said, we'll see how that squeeze works. Momentum shifting higher doesn't mean that, you know, like this one did ultimately fire, but it doesn't mean that, you know, is it a 5 dot squeeze, 10 dot, 20 dot, 100 dot? We don't know. So sometimes this might look good, and I've done that before where I'm tempted to take a trade based off of seeing this, and then sure enough, the next one might be a little higher, and then it goes to a dark blue and it does something like this, and then momentum shifts lower. So you just need to be careful with that. But what I will say is that's what you want to see if you obviously want the markets to go higher. Monthly candle on the ES is still below its 8, not by much though. What is that? 441, 451. I mean, like literally right there. It might switch back before I switch screens. So it's basically sitting right there. We're literally, you know, if it goes up to 44.52, you'll see this candle go back to being green on the monthly. I'm just curious. Come on, just do it while we're recording. I was gonna say live, but do it while I'm recording. Come on, you're gonna drop, of course. Anyway, but that's something to keep an eye on too. Like I said, we got hit pretty hard in January, came down, and obviously closed above it. So you got all-time high and then a decent drop, and then kind of closing right above it. So we'll see. I don't know. I feel like the markets have been negative for a month and a half, 2 months. I mean, realistically, I mean, it's gotten worse with price action in a lot of names, but I think it really started feeling bad back in, you know, middle of November, sometime in here, I think is when it really started. So how long will the negativity and FUD last? You know, that's the question. Like I said, I would think we're up and down until sometime in March, but we'll see. Maybe this emergency meeting, maybe they can do an announcement. You know, they could at the end of the meeting just say, hey, we're raising rates. You know, obviously that would spook the market. I wouldn't be shocked if we're down a couple hundred points on the NQ, Dow being down like 800, 900 if that happened. I don't think they're going to do that, because I think they would lose all credibility. You know, Powell is very, you know, timeline based, very, you know, straight to the point. When I think it was in December's meeting or January's meeting, when he kind of laid out what they'll do, that they figure that they'll stop tapering, basically doing any type of asset purchasing and stuff by March, and then from there, realistically, right, like to change that within a couple weeks, couple months, I think they lose credibility, and I don't think they would ultimately do that. So I think it's, you know, basically what they said is going to ultimately happen, but who knows? That's the thing. That's the wild card. That's the X factor, you know, black swan, whatever you want to call it, you know, and, you know, something that maybe isn't priced in, and that could ultimately upset the market. So we'll just have to wait and see. If it really feels like every single day there's something that can obviously change the trend of this market one way or the other. Anyway, overall solid day. One thing I did make a comment about, specifically in the Russell, and I know that's why I kind of opened with that, is going from 9:30 this morning, that decent sized candle on the Russell, and you didn't see a single red candle, you didn't see a single yellow candle since the open. The Russell was definitely the strongest today. I made a comment, actually it's funny enough, I think on this candle, it's around 12:45, 1 o'clock. about potentially playing the IWM calls or playing the Russell directly long, and that ended up working out. We saw a little bit of selling, like I said, but that was when was it around here? I can't remember. Maybe it was here. No, it was, I guess, around here when Biden was speaking. We saw a little bit of a weakness, and then a rebound from there. Got that 821.34 cross. Actually, I think this was early in the day, so I think it was later. I think it was around this candle or something. We ended up seeing some selling, but anyway, we did see selling right before the end of the day, and then rebounding and basically going out at the highs of the day. And one thing I made a comment about in the room, while this felt a little different, was, I guess you could call it the gap and hold. Maybe that's what I'll name the video for tonight. Is that has been an ongoing theme for people that follow the markets every single day. Is if there was even remote decent news, whatever the case may be, or just for whatever reason, the futures, they're green in the morning. Everything looks like it's going to be okay and decent. We open up, we don't fall. We're kind of holding, maybe slowly floating higher. And then right around lunchtime, 1 o'clock, people getting back from lunch, the market would peter out, kind of trade sideways, and then we would fade into the close. And ultimately either go right on the day or give back almost all the gains, sometimes flushing, and then basically undoing the entire day's action. And that's kind of been the theme. When we do end up starting strong, we end up finishing weak. And that theme has been going on for a couple weeks now. So I made a comment that, I don't remember, the exact time. I want to say it was probably a little after lunch. So probably 1 o'clock, 1:30, going into 2, that, this was relatively strong, all things considered, that we didn't see legitimate weakness where we kind of undo, almost make it like a rainbow, and, start here and then come all the way up and then come back down and then retest where you start the beginning of the day. We didn't really see that. And I made a comment of that this gap and hold felt, I guess, stronger. It doesn't mean that we don't puke into the last 30 minutes of the day, but I made a comment that if it ended up holding fairly well, I wouldn't be shocked if we go out near the highs of the day, and that's exactly what ended up happening. So we'll see if it holds. Like I said, one day up, one day down. It looks like we're going to break all these trend lines. We're going to break above this EMA. Your whatever indicator you use says we're going to go higher. And then sure enough, the next day, because of whatever news, we drop. So that's why I haven't been trading like I typically do. Oh, I like Apple. It's got this setup. It's got this. It's stacked positively. It's doing this momentum. Whatever the reason is for the trade. Okay, cool. We'll buy calls for March, and we'll see how it goes. Like that. Those types of trades. I'm not saying it won't work now, but ultimately throughout the last few weeks, almost the last month and a half, those trades just don't work. Being a directional trader right now, it's chop. And you could have a great setup, but you get that you get that soldier who went to the bathroom on the border, and now he's back on the line. Oh no, this is it. Well, we're restarting, and then sure enough, you wake up and the ES is down 50, 60 points. So it's complete. It's undoing today's move. And obviously, as you guys can see on the screen, since this is live, futures are a little weak, but I wouldn't really consider being down 13 points on the ES anything crazy, especially with the volatility we've seen lately. So we'll just have to see how we open. But anyway, advanced declines were pretty solid. You can see specifically, it got a little weaker into the end of the day for the S&P, but the NYSE basically straight across. And I've talked about that in previous videos. When you see these pegged, and it's your eyes can see it. Look at that up and then down, and a little bit here, but kind of faded, a little up and sideways. But this is a clean, 1800s and above, and it just basically flatlined. You could draw a line from here, and it's basically just a straight line versus all these. And when you see that, obviously it's at the end of the day that it becomes super clear. But if you can see, if you're 2 hours in, 3 hours in, 4 hours in to the trading day, and you still are trading sideways, and you can use the breadth ratios, you can see that the VIX is fairly weak. The cumulative tick is just straight up. When you can use all these different indicators and internals and all this stuff to get an idea that this is pretty strong, and you have price action confirming it, then it's safe to say that you can stay long and that any dip is typically buyable. And we did see that today. You bought down here, you're good. You bought over here, you're good. So once again, these market conditions, you don't want to trust it, but sometimes using 6, 7, 8 different points of reference and putting it all together can pay out pretty nicely. Trin 0.86, so nothing too crazy there. Put call's been kind of all over the place. I'd still consider it fairly elevated. I'm just going to round up and say 0.75, leaning more bearish, which is ultimately good. Obviously, the further something, if it was at 0.9 or 0.1 or something like that, or I shouldn't, not 0.1, but if it's at 1.0, a lot of people bearish. There's a chance, whether it be the next day or the day after or the following week, that there's a good chance that you will see that reversal. You can't have everybody, once again, I use that reference, you got 100 people on a boat. You don't want all 100 people, especially if it's choppy, all on one side of it. So, or just picture a scale, if you will. You got, 100 pieces. If you put 75 pieces on one side, typically you can, just common sense, that scale is not going to be even. So, and when that happens, it has to balance out. So, in a perfect world, we can trade sideways to up, and the put call keeps getting higher. And then that's one of those days where you end up, the ES is up 100 points, the Dow's up 1,000 points, NQ up 500 points, whatever it is, because it's a mix of short covering and once again, just the scales balancing out. Crypto had a decent day. For what? I'm not going to go too deep. I'm not deep diving into crypto, but for something that you would think would trade like gold, it definitely does not. It trades very similar to the markets. It's almost a copy and paste of the NQ. So if you look at this chart and you look at this chart, they're very similar. It's almost like, because people consider, I guess, a technology basing, even, once again, I'm making it like super basic, like, I know a currency this and store value and yada, 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 but I'm just saying it almost trades like it's a tech stock. And that's one thing I've noticed, that, you would think that if there's inflation, maybe it'd be a place to go. But if NQ is getting hit because the 10 years going high, sure enough, Bitcoin's dropping too. So that's just something I've noticed. It's kind of trading how it shouldn't be trading for what it is. Once again, not going too far into it, just something I've noticed, that if the markets do well, and specifically NQ or tech does well, Bitcoin traditionally has a good day. And then vice versa. If it's dropping, Bitcoin drops as well, when you would think it would trade something similar to gold, even though gold seems to be disconnected. Even though lately, last few days, look at that today after everything was going back up. But, you have all that talk of, commodities, oil specifically going up and all these things, and, potential of war. And sure enough, gold finally starts doing something and then dropping back down here. I have a running joke that it's always at 1,800 no matter what's going on. Gold should be dropping in half. It's at 1,800. Oh man, this is the environment. Gold should be up, to 2,000 an ounce or whatever the case may be. It's at 1,800. So I'm still salty about that GLD trade from last year. But anyway, nothing else really to report to here. Like I said, that TNX, which is the 10-year, has been floating up. We definitely don't, that once it got above 2% and hitting 52-week highs and stuff. That's just something to pay attention to when it comes to tech stocks, because obviously that will directly affect it the higher it goes. So in a perfect world, this ends up coming back down a bit. Geopolitical fears, aren't really an issue in a couple weeks, couple months, and the Fed sticks to that, not bullards like we need to be at 1% by, or raised by 100 points in by July or June or some craziness. I don't know, just, if it's, simple, slow, predictable, I think the markets will naturally end up heading higher. Obviously, that's just my own little outlook on this stuff. But let's take a look at the market profile real quick. Initially, like I talked about, we had that balance. We did break out. Looked like we were going to potentially take this out, because I was talking about that. If you guys watched that video, what I was looking for was kind of a go, no-go was above this area once we cleared. And sure enough, we did it in pretty good fashion. We gapped up, held for the most part, a lot of volume and time spent here, and then we just gave it back, and then a whole Russia thing, and took out this. And that's one thing that will typically happen with market profile theory, is when you have balance and you break out and it fails after about a day or so, 9 out of 10 times you will retest the bottom of that. So it's not too surprising that we did it. I'm coming down here, not only tested the lows, we broke out of it, and then obviously yesterday we went a little lower, and then most of the time and volume was spent in the middle range. Overnight inventory, it's almost like a double distribution. If you can see that, you'll notice you have the bell curve here, very thin line up. When was that? Towards the end. Obviously, that's when we probably got that news on Russia, and then we started building out up here. So it's almost like it cuts the day in half. Like this is how it is. You can kind of tell it's news driven, or there was something that caused it because of the single prints up, and then built up here. I think, you know what I think of when I see this? What was that? Not American, maybe it was American Gladiator, like the little Q-tip looking things I used to fight with. Anyway, that's what I see. Maybe I'll coin that for the room. We got a double Q-tip over here. Anyway, and then most of the day today was just, I wouldn't call it a balancing day, but ultimately a lot of volume, a lot of time, everything in the upper range, which is pretty bullish. And like I said, the biggest takeaway for me today was that we gapped up and we held, and we didn't go out near the lows. We didn't even come really back down here once we ended up, not still in the first part of the day, well, midday I would consider G period. That was it. We did take out the lows from the open, but not by much, and there wasn't that much volume. Let me request tick data. I'm just curious to see how much volume was traded down here. Come on, you can do it. Do the spinny thing. There we go. Yeah, I mean, look at that. Not even, they're all triple digits. So not a crazy amount of volume down here. And then sure enough, we ended up coming back up. And where's halfback? Yeah, right there, goal line. So above that, you got the most time. 12 TPO points. That's actually a good amount of time. That's what it felt like. Once again, that gap and hold, you'll see this. And then the most volume, 30,000 contracts, a pretty good amount at 4460. So we'll have to see. Like I said, we are breaking a little lower here, nothing too crazy, but ultimately what I would look for, this volume area, for it to spend an idea. Let's do a little more. There you go. Between these lines, the volume area, which 70% of all volume was traded, doesn't have to do this, but in a perfect world, it stays within this overnight, basically accepting these higher prices from the previous day. And then from there, maybe we'll see if the Fed doesn't surprise us, or, once again, now there's three guys that came back from the bathroom. Where'd this other guy come from? Now the market's scared. Taking all that craziness out of the equation, balancing within here, I think is more bullish than anything. Once again, accepting higher prices, then we can come back up to here and start reattempting, 35 or 4,500 and so forth. But baby steps. You don't want to see that crazy move out of the gate. It's fun to trade, but structurally speaking, that's not what you want the markets to do. Anyway, as always, hopefully this has been helpful. Check us out at OffTheChartTrading.com. If not, go on Facebook and type in Off the Chart Trading and join us on there. You guys have a great night, and I will catch you guys at the next one.